Hello, good morning. My name is Catherine Valega, and my firm is Green Bee Advisory. I run a boutique wealth management practice focused on women business owners, and the LGBT community. Thank you so much for joining me today. We are going to talk about financial planning for the LGBTQ community, challenges and solutions. So let's get started. First of all, we will talk about the economy, address some of the challenges that we face. I am an ally. I'm saying we as an ally. And I will provide you with 6 steps to secure your financial future. So let's dive right in. So first of all, what does our community look like? So there are approximately 11 million in the community, and 88% are employed. That's a large community in the US. Very racially diverse. About 1/3 are people of color, and very college educated as well, about 34%, which is the same for the non-LGBTQ community. So large, diverse, and educated. But there are a lot of challenges that accompany this community that others do not necessarily have to deal with. So let's talk about family planning. So family planning can be very expensive. Whether you choose surrogates, adoptions, in vitro, I've seen costs range anywhere from $10,000 to tens of thousands of dollars, depending on which choice you make. And other communities don't have these additional costs to create their family. Buying a home is a top 3 financial priority. This is similar to many others. Can be challenging, and we're going to address this a little bit more further. And then we have discrimination and microaggressions that I'm sure you have all felt that impact career, impact earnings potential, impact mental health, etc. So additional challenges that really hold us back. LGBTQ plus tend to earn less and save less. So because we're dealing with those microaggressions, we're not earning as much, and that provides fewer opportunities to save. There's also fewer access to benefits. And if you can see here, only 1/5 of US companies are offering paid family leave for LGBTQ plus, which is really a travesty. So we're working harder to create our families. We have less in earnings and fewer benefits to help us along the way. So we talked about home. We have a top priority of purchasing a home. And I'm sure you're aware, there's a lot of studies talking about where do the LGBT community tend to reside. And it tends to be predominantly in high cost areas, typically on the coasts, high cost areas. And that impacts, we want to buy a home, and we're trying to buy homes in California and New York and Massachusetts and Washington State. And it's very, very tough. And we also like urban areas, which tend to be more opening and welcome, and they're more expensive. The community also considers themselves spenders, very loving and gracious and generous. So I love it because we can talk a lot about philanthropic gifting, but we also need to be concerned with, ourselves, not just others. So it is a challenge. So let's turn to the steps that we can consider to secure our future. First of all, marriage. So there's pros and cons on both sides. Do we get married or not? If we're two high earning individuals, there may potentially be a marriage penalty. However, there's also a lot of great things that come along with marriage, including eligibility for Social Security and retirement benefits, potentially access to better benefits, health insurance. There may be tax savings, and then estate tax and gift tax avoidance, which is great. So there's a lot of factors to consider in the marriage decision, not to be entered in lightly. Taking control of your own money. So I always like to say that I tend to be more conservative as a financial planner. I advocate 6 to 12 months expenses saved. So number one, and save in liquid, accessible, short-term cash alternatives. We also want to understand and maximize our benefits. So I see this a lot where individuals do not take advantage. It comes, open enrollment, and there's a lot of great benefits very often if we work for a corporation available to us, but sometimes it's jargony. We're not quite sure. We don't really understand it. So it's great to really dive into to understand which benefits would apply to us. Creating positive cash flow. So as a financial planner, I really am working with clients to increase their income, decrease expenses, so that we have positive cash flow. And once we have positive cash flow, then that gives me funds to work with, whether we're going to save more for retirement or save for a down deposit of a home, down payment, what have you, save for child education. So we really want to work hard to create that positive cash flow. Maintaining good credit. We will understand how credit scores work and work on achieving, healthy credit scores. And also setting clear financial goals. So many people don't think about what is really important to them. And I like my clients to be honest with themselves and to feel good in their choices, right? So I might have one client that says, my number one goal is getting my child through college with no debt. And I have another client that says, I'm very interested in having a closet full of designer shoes. And both answers are awesome. And I want clients to feel comfortable in those decisions and to own them and to feel good. And then we can work towards achieving what is important to us, right? So clear financial goals. Advocating for ourselves. So if your firm has a Pride Employee Resource Group, join it. You want to work on finding advisors and mentors that can really work with you as you progress throughout your career in terms of negotiations, salary negotiations. Maybe you need to have some flexibility as you're raising your family, et cetera. If you are a business owner, you want to make sure you are aligning your fees with your industry. Again, this is really important. If you can find mentors who can help you, make sure that you are getting your worth. Part-time work, side hustles, I love that for everybody. They allow us to fund either more retirement savings, education savings, or maybe a little bit more fun. So think about that and make sure you're finding your mentors. Invest aggressively. So we want to make sure that we are aligning our goals. So we've thought about what's important for us with our time horizon and our risk tolerance. And then we want to make sure we're investing aggressively enough, right? So that might mean changing the balance of the types of investments in our portfolio, maybe less cash and more stocks, et cetera. You also want to make sure you understand, right? So I work very closely. This industry is full of jargon, and I'm passionate about making sure that my clients understand and feel comfortable asking the questions to understand their portfolio and why we've chosen a particular solution for them. Managing taxes, this is a big one. Very often, I see taxable accounts that are managed in not such a tax efficient manner. and we can make a lot of adjustments. And by managing taxes that are incurred along the way, we're basically adding to our underlying return. So that's very important. And then just as needed, right? Life change, market changes, your goals change. You really want to think about it and adjust as needed, and communicate with your advisor often so we know what has changed and if we need to make any changes in your underlying portfolio. Planning for retirement. So starting now. So it's never too late or too early to start saving as much as possible. Here I list different types of investment vehicles: IRAs, SEP IRAs for self-employed, 401ks, taxable accounts. Thinking about your Social Security income and potential income down the road based on your earnings. Long-term care, that's another area where we do need to think about supplementing potentially with an insurance policy to cover the cost of long-term care. And in particular for this community is, and especially singles, is how are we going to pay for our care? We want to make sure we worked hard our whole life. We want to make sure we have the right type of care. And can we find an LGBTQ friendly option as we age? It's very important. And that may wind up being in those more expensive urban areas. So I like this chart. What it basically shows us is the earlier we start saving, the better. So let's just go through kind of a initial example. We start saving when we're 20 and we save just $2,000 a year. Okay, $2,000. It's not a lot of money. By age 65, this is assuming a 6% return, we will have saved $425,000 for our retirement. However, if we don't start until we're 40, 50, 60, you can see how these amounts diminish, right? This is really not enough for us to retire on. And then on the flip side, right, if we start saving early and save $10,000 a year at a 6% return, which is fairly conservative annual rate of return, by 65, you'll have accumulated $2 million. So the point of this slide is the earlier we can start saving as much as possible, the better. Protection. So the best plans can be derailed by life events. So when we have loved ones and need to protect, our value and our income, we want to make sure we are considering the options for life insurance. If we own a business, we have properly structured the business to protect ourselves for liability. Disability income insurance protects our income. If we get sideswiped by a bus when we're taking the bike to work and we're out of work for 6 to 9 months, right? This will allow us to have some income coming in to cover our costs. Then we also want to review our business, our home, our auto liability, all of those policies, review umbrella liability insurance I talk about, that's important. Health insurance, can we maximize our insurance? What are our options? And then long-term care insurance is important as well. Creating an estate plan. So this is very important, and this issue is more and more important now, just sort of given the general political environment we live in. But when we create an estate plan, we typically think, when we have children and they're minors, we think about who we might want to be their guardian if we unfortunately suffer an early demise, right? Like, who will take care of our children? And 10, 20 years ago, maybe this would not have been as much of a significance, but now it really is, right? If, let's say we have a transgender child and grandma lives in Florida, and I really don't think my child will feel comfortable growing up in the schools in Florida, I may want to rethink who I've appointed as a guardian. So location matters. And it's something, if you've already drafted, consider, make sure you feel comfortable with your choices. And if you haven't, just make sure you consider that as you move into the drafting stage. Work with an estate planner, power of attorney, healthcare proxy. They may have you work on trust. And then if you own a small business, you also want to talk to them about the succession of your business. What would happen if you were to pass? So in summary, right, we have a lot of challenges in this community, but they are not unsurpassable. We can, with proper planning, we can approach them all head on, right? We want to take control of our finances. We want to understand what's important to us, understand credit scores, save appropriately for emergency expenses, et cetera, but really kind of take control and understand our financial picture. We want to advocate for ourselves, for others, find the mentors that will help us achieve better options in our career, for our businesses. We want to invest aggressively, right? You want to make sure that you're setting your investment portfolios up for the appropriate long-term growth based on your time horizon and tolerance for ups and downs of the market. You want to plan for retirement. The earlier, the better. So I know in my family, I have 4 daughters. I've started them on Guardian Roth IRAs as soon as they were earning money in high school. And so we've started the conversation about saving for retirement. Retirement is an esoteric concept to them, but we start that conversation early so that they understand as they progress throughout their life how important it is to save for retirement. So the earlier you start, the better, but it's also never too late. If you haven't done much up until now, let's talk and let's get started. Protecting our loved ones, right? Planning insurance needs, so life insurance, disability insurance, our property and casualty insurance, business insurance, et cetera. And then making sure we create an estate plan. That's very important. And if we've moved, we need to review it. Every couple of years, we should be checking back in with our estate planning attorney to say, do we need any changes based on changes that are happening in their world that we're not on top of? So thank you very much. Again, my name is Catherine Valega. My firm is Green Bee Advisory. You can see my phone number down there, 781-850-4610, and I'd love to schedule time with you. This is an area that I'm passionate about as an ally, and I'd love to be able to help you and your loved ones feel good about your financial future. So please do reach out and schedule time. Thank you so much for joining me, and have a lovely day.